To build anything that truly lasts, it takes time.
Understand what the macro setup is looking like. We are now joined by Mr. Santosh Rao, Head of Research and Partner at Manhattan Venture Partners, now joining us. Thank you so much for taking your time out and joining us here on ET Now. And first, my question will be with respect to interest rate environment, especially after US President Donald Trump yesterday again criticized Federal Reserve Chief Jerome Powell. How do you read this development, and what does this mean for Fed's next move and back home for India and RBI governor's move as well?
Hi, good morning. I think President Trump making comments about the Fed chair is not unusual. He does that all the time, but he doesn't worry about that. I think what's really driving the thinking, or the market is thinking, that the case for cutting rates is getting stronger and stronger. The job market is kind of weakening. We'll get the jobs report this Thursday. It's expected to be about 110,000, which is lower than the prior month. Unemployment rate is going to tick up slightly. Inflation is coming down at this point. There was some little bit here and there, but it's generally soft. So I think the case for cuts. Now, the only issue is it going to be immediately, or is it going to be in the later half when the tariffs land and we get certain certainty as to where the tariffs are landing? I think that's the only thing holding the Fed chair back. So I think at this point, the market believes that the case is getting stronger and stronger for rate cuts. I'm in the camp that believes that 2 cuts this year is likely. He doesn't want to get too ahead of the whole inflation scenario. So I think he's going to keep it there, 2 cuts maybe, unless the things get really bad. And that's another argument. If the things get really bad, and if he cuts more than 2, that means things are really bad, and you don't want to give that message. So I think 2 is the right point. Later off in the year, I think that's where we are at this point.
All right. Hi, Mr. Rao. This is Kanishka also joining in. First of all, a very good morning to you. And that's the view as far as the Fed moves are concerned going forward in the year. You expect 2 more rate cuts going forward. But now talking about the markets, now S&P 500 and NASDAQ, they're both at record levels at this point. Now going forward, as we enter the second half of the year, what is your expectation? Do you think this rally could continue, especially given that July 9 tariff deadline looms? And also, is the rally expected to continue, or do you think volatility is expected to be back?
Yeah, volatility is the name of the game, and it's going to stay that way for a while, only because there's so many cross currents. At this point, the market is bumping against all-time highs. So, and in fact, it has crossed all-time highs in some indexes. So at this point, and earnings reports coming out next week and on are going to show that the earnings growth has slowed down. So that's a concern. I don't see any reason for multiple expansion. So my bet is that the market is pretty much going to be flat to down going forward until much later in the year, when the tariff thing is done, and then we get a sense of how much tax cuts and what is the new budget, and at what shape it takes in the end. So at this point, there are more ifs, ands, and buts. We don't have any definitive thing, but safe money is betting that it's better to be cautious at this point. Things can get really bad because the economy is slowing down, and we need a catalyst to really bump it up. And right now, I don't see one right there, other than lowering interest rates and really spiking up the market in terms of sentiment going forward.
Okay, so those are some of the triggers that could impact global market. But Mr. Rao, if you can tell us, what is your view on emerging markets, including countries like India, especially in the backdrop of tariff overhang, which could probably play out in the first week of July? How do you view emerging markets, especially India?
Yeah, I mean, the way tariff negotiations are going on, I think President Trump is in no rush. Of course, he has these deadlines, and they're very loose deadlines. So he's going to work around and try to get to a reasonable point. At this point, there are some sticky points here and there from last I read. So it's going to be an ongoing negotiation. It's going to go way past July 9th. That deadline, I think it's pretty much a given that he's not bound to that number. But overall, I think the emerging markets should benefit from the falling dollar. I think that's a big thing, and falling energy prices. That's great. Those are big pluses for the emerging markets. So it's so also for US actually. So net, I think the tailwind is pretty good for emerging markets. India, specifically, they need to sort out the trade deals, whatever sticking points there are. But in the end, I think it'll be an amicable settlement because Trump needs to show some development on the tariff side. He's made so many promises, threatened so many countries. He needs to come up with a good solution. He needs to settle this dispute. If not, he's going to look bad, and he has elections coming up next year. So he wants to pretty much get some wins in his column at this point, and he doesn't have much other than a framework with UK and China and maybe Canada. But other than that, hasn't had any specific ones. So I think he needs to show that. And India, if he can come to a good settlement, that'll be a big win for him to show that he's doing well, that he's coming true on his word.
Okay. All right. Thank you so much, Mr. Rao, for all those views. And thank you so much for joining us this morning on ET Now and helping us decode the global market setup. Thank you.